Hey everyone, welcome back to the channel, which is all about income-oriented investing. And once again, it's time to review and share with you an update on my portfolio from A to Z, all my investing accounts in black and white. It's your favorite video. Once again, something I like to do every single month. So this is update number 18 for October 2022. And remember, I have a YouTube or a specific YouTube playlist that has all my portfolio unveiled videos, so you could see my entire journey, which I share with the world. So make sure you're watching the latest update. So just a very quick update on my or description of my investing style before I show you everything. I am a long-term buy and hold income-oriented investor. So the primary objective of this strategy is, of course, to generate high and consistent passive income via distributions and dividends every single month as safely as possible. So most, if not all, my returns, everyone, does not come from capital appreciation or stock price increase. It comes from the consistent income that my portfolio generates. So how do I achieve this? Well, my portfolio invests primarily in funds that have blue chip stocks inside of them and use income enhancing strategies like covered calls, like leverage, or sometimes a combination of both. So they provide consistent income, and the intent is really to hold them long term and just collect that sweet income as we go, right? Not to buy low and sell high. I don't do that. So what will I show you in this video? So very quickly, I will show you an overview of my 6 investing accounts in PASSIV, a really cool tracking software that really consolidates all my investing accounts in one place. So it's a lot easier to digest. Just to make sure, just to prove to you that the numbers in my title and my thumbnail are 100% legit. And then I'll show you my portfolio in Excel spreadsheets, and we'll go through each holding one by one, and I'll tell you if I made any changes from last month, and I'll go through all the holdings. If there's any news on them, I'll cover them as well. So remember that you could download the Excel spreadsheet of my portfolio, which also comes with a free blank template, by the way, on my website, passiveincomeinvesting.ca. Just click on the free tools tab at the top, and it will be the very first download. So in case it's too small when I show it to you in Excel, you could download it and follow along. So without further ado, it's time to check out my portfolio for October 2022. Let's get to it. All right, everyone. So this is a snapshot, an overview of my entire portfolio and what it's worth. And this is pretty much the exact number you see in the title, right? So this is my dashboard in PASSIV, a really cool little software that I've been using and I use to track my portfolio. I've actually not really been logging into Questrade all that much anymore. It's much simpler logging in here to see everything, the value, the dividends coming in, etc., etc., etc. So I strongly suggest you guys download it for yourself, because if you have multiple accounts, even multiple brokers, you could consolidate everything here. And the good news is that there's a free version. So you could just get the community user version here. It's completely free. You could consolidate everything. Really cool. But if you want, if you're with Questrade like me, you could upgrade to the elite membership here, and it's completely free instead of $99 a year. And there's some extra cool features. You could even place trades in it directly in PASSIV instead of going in Questrade. So really cool. I strongly suggest it. I have a video that I've made where I kind of go through this software. I won't do it here, but search my videos, just search for PASSIV and you'll find that video. And remember that I have a code. If you use my referral link, it's in the video description below. And if you want to upgrade to elite and you've used my referral code, you will get half off for the first year. So pretty cool. PASSIV was nice enough to give me that for you guys. So if ever you just you don't feel like paying for it, or you just want to try it out, go ahead and sign up and to the free version. But remember, if you're with Questrade, the elite membership is 100% free. And if you don't have Questrade and you want to try the elite membership, you could get half off if you use my code. So going back to PASSIV, this is my dashboard. This actually combines my 6 investing accounts, which are here. So as you all know, I consider that I have 2 separate entities. I have my main portfolio here. So my main portfolio, which the value is just under 556,000. And by the way, everything's in Canadian dollars here. So my main portfolio is my TFSA, my wife's TFSA, and our joint cash account. Okay, so I won't go through each of the holdings here because all the book prices are wrong anyway, because once I transferred from TD to Questrade, it messed up all my book prices. But don't worry, my book prices are all 100% accurate in my Excel spreadsheets that I will show you. This is just to give you an overview. So my main portfolio is basically what I live off of, guys. This is the income that I extract from all three accounts every single month, and I live off of, I pay my expenses. And then the second entity, which basically is not touched, I don't touch the income that's generated. It's either on drip or I reinvested manually. I call it the manual drip, is my retirement account. So my retirement accounts is my RSP, my little lira, and my wife's RSP. So we will go through all these accounts together now in Excel spreadsheets, so it's much easier to digest. But I just wanted to, this is completely up to date. I'm filming this at the market close of October 5th to make sure it's, I show you guys or prove to you guys that the numbers I'm giving you is accurate. So now let's check out the portfolio in Excel. All right, everyone. So as usual, we will start with the retirement account. So my RSP, my wife's RSP, and the lira. And what I do, as you all know, for these accounts is go mostly with US listed holdings because there are no withholding taxes in the RRSP and lira specifically. So let's start with what I actually bought. And like I mentioned in my HYLD video that I did, I dropped $15,000 in HYLD this month. So I actually dropped 10K in my wife's RSP. So you have it here, right? It says 7.5K, but that's 7.5K US. So it was pretty much 10K on the dot here. So that is what I bought from the last portfolio update. And then I dropped 5,000 Canadian in HYLD in my main portfolio, which I will show you in a second. So that's the only thing that I did. And as you could see here, so like I show you every time, what do I track in the RSP? Well, since nothing is coming out, it's very easy to measure the performance, right? How much did I actually put in the RSP and what is the value of the account right now? So that difference is what gives me the overall return here. So very simple. That is what I track. I do a little bit more tracking, including the yield and all this stuff for my RSP because there's no drip. For my wife's RSP, which we'll talk about in a second, everything is on drip. So I'm not gonna start tracking everything because it would be very hard to track when you're dripping something, right? Very hard to track the book price and all that. So I just do the basics for my wife's RSP. So let's go through the holdings of my RSP. I'll tell you if there's been some action. There has been some action on some of the holdings I have. And just a quick note, my RSP, everyone, I kind of have fun with it. This is more my YOLO account. I'm not even 40 years old yet. So our RSPs are not going to be touched for a really long time. So, we, especially with mine, I kind of like to go get some crazier stuff in here. So it's definitely not one you should follow. It is, I consider, a little bit more high risk. If you're going to follow more of a basic income-oriented RSP, then you're much better off following my wife's account here. It's much more moderate. This is a little bit more crazy. So CLM is right now my biggest holding. So CLM, no changes. It's been going down like the overall stock market has, so no surprises. CLM is, basically has whatever, same type of stuff the S&P 500 has. So it's mostly blue chip US stock. So it's going to follow whatever the S&P is doing. And one thing I just want to mention, and I apologize for this confusion. I know in the last video in my stock picks of the month, I said that CLM drips at NAV. So that is, it is true, but it's only if you drip it with a CLM itself. So it doesn't drip at NAV. If you use a broker like Questrade or any broker, it will drip at the market price. It's only if you register with CLM itself. So I guess you got to go on their website and you got to follow the instructions. But if you look at CLM's drip document, it does say that it drips at NAV basically, but you have to register with them. So I don't have any experience with this. I've never, done this before, never dripped it with them. I don't know exactly how it works. If ever you have, or I don't know, you do drip CLM at NAV and you're watching this, drop me a comment below to tell me how it works. I'm actually very curious, but unfortunately, if you're just using a regular broker, it just drips at market price, not at NAV price. So I apologize for the confusion. And keep in mind, guys, that CLM is about to reset their dividend. It's going to reset at the end of October for the 2023 annual amount, and get ready for a big drop. Okay, it's not a way, it's doesn't mean we need to panic or anything like that. This is just completely normal. CLM resets their dividend to 21% of whatever the NAV is. So last I calculated, it's going to drop pretty significantly here, but I think, even with a significant drop, I'm still going to make over 12% yield with CLM. So I cannot complain about that, guys. Next one is SFOL. SFOL, no changes. They declared another 32-cent distribution. Very, very impressive. This is definitely going to be one of my primary holdings in my RSP. It always impresses me. It's doing very, very well. I have a video on SFOL if you want to check it out. Very, very unique ETF that basically shorts the VIX. It monetizes fear itself. Very, very interesting. I absolutely love it. We're talking 15, 16, 17% yield all the time. I'm making a nice 16.22 here. So it's usually about 15 to 17% yield. Really, really awesome. I love SVOL. Next one is two eTrax ETNs that I have. So the first one is CEFD, pretty much my favorite one out of all the eTrax ETNs, because it's what I like to consider an all-in-one closed-end fund solution. So it has over 100 closed-end funds in here. The reason why the yield is always pretty crazy, it's at 15 or 16% now, percent yield right now, is because it's leveraged at 50%. When you see 1.5, that means 50% leverage. So a lot of leverage on this guy. I really, really like it. It's what I consider an all-in-one closed-end fund solution. So instead of picking and choosing closed-end funds, which are income-oriented funds, which the US has a lot of, and in Canada we don't have many, but in the US there's hundreds and hundreds of them. So this is just an easy way to capture all of them with one fund. So CEFD is a choice. RIV is also another choice, which is in my wife's account here, and Erica's account, and there's also YYY from Amplify ETF. So those are three really cool solutions to get kind of like an all-in-one closed-end fund solution. So these are my three primary positions here. Now we'll go to my more fun and niche positions. So I have BDCX. This is also an ETN that basically is an index that tracks all the BDCs in the US. Okay, so instead of picking and choosing BDC companies, which kind of act like REITs, they have to give out 90% of the income to their shareholders. So really cool if you're an income-oriented investor. And instead of picking and choosing BDCs, you could just take BDCX. By the way, they also have one that does not have 50% leverage. I think it's BDCZ, if I'm not mistaken. So yeah, then you have OPP. So OPP, I'm planning probably to get rid of it sooner or later. I don't want to do it now because it's down, it's trading at a discount. So I definitely don't want to get rid of it now. So this is a lot of fixed income. It has a lot of mortgage REITs, which have been doing horribly. So that's why it's doing pretty bad. HGLB, just a nice little single closed-end fund that has a dividend policy like RIV and CLM, where they reset it annually, but it's very, very moderate at 8.5%. Can't complain. I'm getting 12%, still at 12%, something like that right now, I believe. Maybe a bit lower, but this one always trades at a big, big discount, like 25-30% discount. So ORC. So ORC has been getting destroyed lately, and let's not sugarcoat it. It just did its split. So with the split, basically, I multiplied my book price 5 times because it was a 1-for-5 split, right? So even with the new distribution rate at 192, I'm making 7.73% yield, $100 a month still. So, but I'm pretty much down 2/3 of my value on ORC. So yeah, ORC it's not something I would ever invest in again. This just goes to show you the more niche you go, the worse, the higher risk is. But keep in mind, ORC invests in agency mortgage-backed securities. So these are mortgages that are guaranteed by the U.S. government. So they're getting squeezed now basically because interest rates are going up. So I'm just going to hold on to this one. And by the way, eTrax has a mortgage REIT ETN that's also getting killed called MVRL. That's something I would have invested in instead of ORC if I would have known. Now, these guys, Credit Suisse, the silver one, the oil one, they just did a 1 for 20 reverse split. So I know I've been getting a lot of messages. What does that mean? Well, usually a split or reverse split actually means pretty much nothing. Usually the dividend just, should increase 20 times. So we'll have to wait and see what the next dividend distribution is going to be declared. It should be actually next week. So what I did for this one, I just increased my book price 20 times because the share price basically increased 20 times. But I also increased the annual dividend rate 20 times as well. But we'll have to wait and see here. So, there's a lot of Credit Suisses in the news. There's a lot of fear with that. I'm personally not worried. I'm not going to dump them just because of that. Credit Suisse is a really, really old firm that's been around for over 100 years. I think they'll be okay. We'll just wait and see what happens. But it's not going to cause me to panic and just dump them for no reason. These are very, these guys here, very, very niche. All the bottom half here, very, very niche holdings that the more niche you are, the more volatility you gotta expect. Last but not least is the Ether one. So this one, I'm okay at 9.65% yield. I can't complain. So you win some, you lose some when you take chances, right, guys? I mean, HGLB, I'm doing well on. BDCX is okay. OPP, gonna reduce their dividend significantly, but I'll probably won't have that one. Silver one, not doing great. Because silver's been pretty low, but the oil one is really, really nice, been getting nice high yield. The Ether one is okay at under 10. So overall yield 14.81. I'm not going to complain, making about 21.83 USD a month. Onto my wife's account here. This is much more conservative. So the top positions are QYLD, RYLD, which I love. I continue to love. I am not scared about holding these. They're just dripping away. I love that they're dripping away now when they're low because I'm just buying cheap shares every single month. And as you could see, my position in HYLD.U, which has QYLD and RYLD as well as XYLD, has increased. And I'm going to keep investing in HYLD.U going forward until my RSP contribution is basically complete. Because remember, guys, and I don't want to get into this now, but I'm going to be declaring non-residency in 2023. So this year, or the 2022 tax season, is the last time I'm ever going to be able to invest in the RSP. So this is why I'm focusing on my RRSPs right now, not my main portfolio yet. Then there's RIV, already discussed it, all-in-one closed-end fund solution. Not been doing well, of course, but that's okay. It's normal. Nothing has been doing well. RA, where I get my real assets, so everything to do with real estate, infrastructure, real assets. I really trust Brookfield. I love them. No changes on these two. GOF is kind of similar to OPP. It's fixed income oriented, but it does not have as much mortgages. So OPP, GOF, and even PDI are the three that I like that are fixed income. But personally, I'm starting to get away from fixed income. But these are just dripping away. I have no worries whatsoever holding these long term. They will probably always be these five. And if you're asking, will you ever get rid of QYLD and RYLD and put it in or streamline it to HYLD.U? The answer is maybe and probably, but not right now, while QYLD and RYLD are down significantly. So I have to wait until I dollar cost average in. And last but not least, my little Lira here, which just has the Bitcoin yield ETF, which of course has been doing horribly. You see here, I invested 33K. Now it's at like 16.6. It might even be lower. I don't know. I didn't update it. That's the only one I didn't update. These ones are updated here, but I didn't update this one. So all in all, everyone, my retirement accounts helped with the increasing US dollar, of course. I put the exchange rate at 134. I always just take the Google exchange rate and usually reduce it by 2 cents. So I'm making about 52.60 a month Canadian, which is just compounding away. So these are the retirement accounts. Let's check out the main portfolio now. All right, guys, main portfolio, which is the combination of our two TFSAs and joint cash accounts. So like I mentioned earlier, the only change I really did was I picked up another 5K of HYLD. It was too freaking tempting. I mean, come on, 14% yield or something like that. And now my yield on HYLD, which is my biggest position by far, at 17.35%, which gives me $1,000 a month, guys. That's awesome. Just this guy here. I love HYLD. We all know, right? It has QYLD, RYLD, XYLD, the three of the most popular covered call ETFs on the US market, as well as HHL, HBF from Harvest, TXF from CI and GLCC from Horizon. So really, really nice mix here. So I'm making 11% yield, even though it's like 14% or almost 15% yield right now. So yeah, keep buying HYLD, guys. Now is a great time. My main position here. Then there's HDIV. This is the other all-in-one covered call solution from Hamilton. Been doing extremely well. I mean, it hasn't missed a dividend, no problem. Over 10% yield right now. I think it's just under 10% now. I have it yield book price at 17, so my yield's a little bit lower on these, unfortunately. I can't wait until my RSP is done so I could start investing and dollar cost averaging this main portfolio here. And of course, these three are definitely my favorite funds right now. The third one is, of course, the third all-in-one covered call ETF from Harvest. So this one has the 6 Harvest covered call ETFs all in one. I think it's just under 11% yield right now. So all of these have not missed a dividend whatsoever. Really cool. So those are my main 3 ETFs. These 3 guys just make up over a third of my portfolio, and I'm assuming that they're just going to keep growing and growing. I wouldn't be surprised if just these 3 make up like 40, even 50% of my portfolio down the years. Then there's BTCY, ETHY, which of course are the biggest drag on my portfolio right now in terms of yield because they have lowered their dividends. So these are just the average, these annual dividends, by the way, are the average of the last 3 distributions. But hey, I'm not going to complain. 5.84, 4.66. So I'm eventually going to be, I hope these stay low for a lot longer because I really want a dollar cost average them. But I want to make sure crypto does not go over 10% of my overall portfolio. Right now it's at 9.62. So eventually I will definitely dollar cost average these. Next, onto the closed-end funds. Those are the rest. So I have EIT, which is the king of the closed-end funds on the Canadian stock market. Been performing extremely well because it has zero technology, and it's really technology that's been dragging. So I absolutely love EIT. Who doesn't, right? I don't think I've ever met anyone who doesn't love EIT. And the next ones are all my split share funds. So DFN, FTN by Quadravest. No dividend misses at all yet, which is pretty cool. And by the way, if you put your cursor on all of my split funds, I actually track when the first distribution is, if there's any updated news, how many distributions the fund missed and how many distributions I missed. So I like to track that. So, you could go through it if you want. When you download my portfolio yourself. So yeah, DFN, FTN, nothing really to report. Now we have the Brompton ones. You have LBS and SBC, which are specific financial ones. So FTN, LBS, SBC are my financial specific split funds. I would say the one that's most attractive to me right now is FTN because the NAV is pretty close to the market price. So I'm keeping a close eye on this one, maybe adding a little bit on this one soon. LBS, SBC, no dividend misses. GDV, no dividend misses. GDV, unfortunately, trading at a really big premium. I know a lot of you are waiting, but it's not a surprise to me. So the more popular fund is, the more it's probably going to trade at a premium. DGS, flirting with that 15% unit NAV, so it might miss the distribution in November. We'll have to see in October, in the 3rd week of October, if it reaches $15 unit NAV. So keep an eye on this one because it's always interesting or attractive to buy a split fund when it's close to that $15 unit NAV or under, because that usually makes it people oversell it, and then the NAV becomes very attractive, or you sometimes even trading at a discount to the stock price. PWI, sustainable power and infrastructure stocks. So this one is also a good time to pick up right now. I believe the premium discount percentage is I think it's only 10% premium or something like that. So one of my lower yielding split funds, but of course this one has less risky stocks in it, right? So a lot of utilities and chemical companies and stuff like that. Then there's ENS and RS for Middlefield. No dividend misses. Everything's completely fine. I love these ones. These are really the low risk split funds that have really high unit NAVs. RS just did an overnight offering because it was trading at such a big premium. So some great time, I guess, to pick up some RS, but still trading at a premium. So remember, guys, when you're looking at any split fund, always look at what the NAV is compared to the stock market price. And I'm not saying it's bad to buy something at a premium if it's 5, 10, 15%, but starting at 20, 25%, it's kind of a big premium. So that $5,000 I put in HYLD increased my my monthly income. So I'm at $56.35 total. So that is my main portfolio, guys. Let's go through the totals. And by the way, to explain this, because I don't want to make this video too long. I'm actually going to make a separate video to explain my portfolio structure and totals in detail. So watch out for that video in the next month or two, guys. It's going to help you understand what this is. But this is basically my book cost, how much I invested of my own money, how much my portfolio is actually worth right now. So it is worth obviously less. This is taken from passive, right? 555, 700. But this number here is my portfolio value plus my total profit. So it's this number here, 5557, plus total profit. What is my total profit? Well, it's this number here. And my total profit is basically all the income I have received to date, all the realized income I've received, and also all the realized capital gains I've received from actually selling funds when I streamline my portfolio. So stay tuned for a video. I'm going to show you this in detail more. So this 304 plus 555, this is basically my portfolio value plus total profit. So if you compare to what I put in, 634, I'm way ahead. So my monthly passive income from my main portfolio is now 5635 with an average yield of 10.66. 1066, how funny is that, right? William the Conqueror, for you history buffs out there. So there it is in a nutshell, my main portfolio, my retirement accounts. Here it is once again from A to Z. Let me know if you have any questions. And once again, look out for that detailed portfolio structure and totals video coming out in the next couple of months. See you next month, guys, where we'll do the exact same thing. And I share my entire journey with the world, and I will keep doing it until I can. See you next time. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals. And it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it. So there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website, on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.